Your revenue is up, your margins look right on paper, and you are still stressed about cash. If that sounds familiar, it is not a math problem. It is a visibility problem. And the thing about visibility problems in a business is this: you do not know you have one until the moment you need to see something clearly, and you cannot. The bank account drops, payroll gets tight, a check bounces. None of that was a surprise to the business. The business was telling you for weeks. You just did not have a system to hear it. The gap, not the number, the timing. This is Notebook of a COO. If you are building a business and you want operational thinking instead of motivational content, subscribe now. This show is not about grinding through cash crunches. It is about building the system that sees them coming before they arrive. Season 2. Let's get into it. So what is the 13-week cash flow forecast? It is not a budget. A budget tells you what you planned to spend. It is not a P&L. A P&L tells you what you earned and what it cost you to earn it. The 13-week cash flow forecast tells you something neither of those documents can. It tells you when money actually lands in your account, when it actually leaves, and what the gap between those two moments looks like 13 weeks in advance. That is a rolling 90-day visibility window into your cash position. Not what you made, not what you owe, what you will actually have on any given Thursday morning when your obligations show up and your deposits have not. That is the document. Here is what it looks like without one. January. Revenue is up 30% over last year. You are profitable. Your accountant confirmed it. February. Payroll hits on the 15th. A vendor invoice came due on the 12th. 2 client payments that were due on the 10th are running late. You have a profitable business and you are holding your breath until the 17th. That is not a revenue problem. That is a timing problem. And timing problems cannot be solved by selling more. You cannot invoice your way out of a cash gap that is already open. You can only close it if you saw it coming. The operators who end up in that position almost never saw it coming. Not because the warning was not there, because they had no system to read it. Drop a comment if you have ever had a profitable month that still felt like a cash crisis. I read every one. So why does this keep happening? Start with the most dangerous assumption in small business finance. The assumption that profit and cash are the same thing. They are not. Profit is an accounting concept. Cash is a physical reality. Here is a simple version of how they separate. You close a $20,000 project in December. You invoice on December 31st. Your client pays net 30. That payment lands January 30th. Your December P&L shows $20,000 in revenue. Your December bank account never saw a dollar of it. Now scale that across 12 active clients, 6 vendors on different payment cycles, a lease payment on the 1st, payroll on the 1st and the 15th, and a quarterly tax deposit in April. The profit looks fine. The cash position depends entirely on timing. And timing is invisible until you build a system to see it. The American Institute of CPAs has tracked this. 82% of the small business failures they analyzed were preceded by a cash flow crisis. Not a revenue crisis, not a profitability crisis, a cash crisis. In most of those cases, the business was profitable on paper. The problem was not that the money was not coming. The problem was that the money was not coming at the same moment the obligations were leaving. The gap, not the number, the timing. But here's the part most operators miss. The 13-week cash flow forecast is not a prediction. It is a map. You are not trying to guess the future. You are building a structured view of what you already know is coming so you can see the gaps before they arrive. Here is what the map contains. Column 1, the week, 13 weeks out, 90 days. Every week gets its own row. Column 2, expected cash in. Every payment you expect to receive that week. Client invoices, recurring revenue, any inbound transfer. Use actual invoice dates and actual payment terms, not what clients should pay, what they typically do. Column 3. Expected cash out. Every obligation you have that week. Payroll, rent, vendors, subscriptions, loan payments, tax deposits, everything that leaves your account in that window. Column 4. Net position. Cash in minus cash out for that week. This is the number that tells you whether that week is safe or exposed. Column 5. Cumulative balance. Your running account balance across all 13 weeks. This is the number that tells you where the floor is. When you map it this way, a cash crunch does not sneak up on you. It appears on week 7 as a problem with a flag on it. You have 7 weeks to do something about it. That is the difference between a managed problem and a crisis. Drop a comment. Do you have any cash visibility tool in your business right now, or are you flying by the bank balance? Tell me where you are. And the number one reason most operators never get the benefit of this tool even when they have it, the reason? They build it once and abandon it. A 13-week forecast that was accurate last month is not accurate this month. Cash position changes weekly. Clients pay late, new projects close, and unexpected expense lands. The forecast is only useful when it reflects reality right now, not when you built it, now. That requires one habit. Once a week, 15 minutes. Every Monday morning before anything else lands on your desk. Step 1. Update actuals. Pull last week's actual cash in and cash out. Replace your estimates with what actually happened. Step 2. Roll the window. Remove the week that just passed. Add a new week 13 weeks from now. The window stays at 13 weeks, it just moves forward. Step 3. Read the signal. Look at your cumulative balance column. Find the lowest point in the next 90 days. That is your floor. Is it comfortable? Is it yellow? Is it red? That reading is your Monday morning operating decision. 15 minutes every week. Without that habit, the forecast becomes historical data. With it, it becomes a navigation system. So what actually changes this? 3 moves. Not a new accountant, not a bigger line of credit, not a bookkeeping app. 3 operational moves. Move 1. Separate profit from cash in how you think about your business. Stop using your P&L as your financial dashboard. It tells you one thing. Your cash flow forecast tells you something different. You need both. Running a business on your P&L alone is like navigating with a map that shows roads but not traffic. Move 2. Build the 13-week template. 5 columns, 13 rows. 1 for every week of the next quarter. Expected in, expected out, net, cumulative balance. If you already have a spreadsheet with your recurring obligations listed, you are halfway there. If not, start with what you know with certainty. Payroll, rent, fixed subscriptions. Build out from there. The Operator Tools section of the site will have the template built and ready. Link will be in the description when it goes live. Move 3. Protect Monday morning. 15 minutes every week. Non-negotiable. Update actuals, roll the window, read the floor. That habit turns the template from a document into a navigation system. The operators who avoid cash crises are not the ones with more revenue. They are the ones who see what is coming 90 days out and make decisions while they still have options. Not when the bank account tells them, before. Here is your one move coming out of this episode. Take the free operator assessment. 3 questions into it, you will know exactly where your operations are most exposed right now. If it is cash visibility, the assessment will tell you. If it is a different part of the system, the assessment will tell you that too. 3 minutes, free. Link is in the description. And if you want the 13-week cash flow template we walked through today, it is coming to the Operator Tools section of the site. Link will be in the description when it goes live. If you already know which part of your operation is most exposed, leave it in the comments below. Foundation builder, stuck operator, scale ready. Tell me where you are. If this episode gave you something useful, share it with one operator in your world who is making financial decisions without a visibility tool. Subscribe if you have not. We are building here. Season 2 is just getting started. Wherever you are, that is exactly where you are supposed to be. But that does not mean you have to stay there. Until next time.